we'll start off. Well, we'll start off with the market. Here it is. You can see that. I hope we're looking at the S&P 500, and we've got, I think here, the Putin effect, and then he sort of withdraws his tanks a bit, and then he's not quite so sure, and so on. So it looks like we're getting a bit of sideways movement in the overall market. I don't mind that in the slightest. That's a chance to sell more puts when it's near the bottom, and to sell calls when it's near the top. And the individual stocks are doing their own thing anyway. Just a quick look at the VIX, which is the measure of volatility. Because of world events, we're getting two spikes of volatility during this month. So there's been lots of trading opportunities there as well. We haven't been so happy since Donald Trump was in causing trouble and throwing his toys out the pram. We don't mind if Putin's taken over a bit, obviously from purely a trading point of view. So that's what's happening on the overall market. And this account is growing like crazy, of course. Can you see the account now?
Yeah.
Well, there it is. So we haven't had that much extra money yet. We have had a bit of extra money, I think, but we've got a net liquid value. We're well north of 500,000 now, and the cash is 264,000. So there's plenty of money about. If we take half of the net liquid value, that's about 265,000. That's what we need to stay above on stock buying power, and we're at 324,000. So we are in the market for bargains. However, we'll look at that a bit more closely when I put the spreadsheet up, which in fact I'll do now. I had a major disaster this week. I lost my spreadsheet. It disappeared into the cloud. I had to redo it.
Oh my God.
Oh, I know. It's not. The trouble is, I enjoy it.
Oh God.
And it came back stronger. It's a better one. I've now got it. I've now got the spreadsheet. I had it linked to the stock market, but it is. Oh, there's people trying to get in still. Hang on. There we are. Admit all. Yeah, I had it linked to the stock market via Google Sheets, and I was really missing the obvious way of doing it. If I look on data, it really is obvious. There's a big sign here that says.
Hi, everyone.
Yeah. So if anybody wants to do that, all you basically, I use this space here. All you do is put a stock symbol in, anyone to show it, and then click on the symbol, and that's it in. Thereafter, a little box comes up, and if you click on that, you can put on the price to earnings ratio, the annual high, the annual low, the industry, the volume, also anything and everything. And you just click on that, and there you are. That makes life so much easier. So that is good. Right, but back to the actual spreadsheet itself. And the first thing to say is we have got a lot of stock. All of these are stocks that we actually own. So there are 28,350 shares, and we'll be getting more put to us over the weekend. So we definitely have got a lot of stock, and a lot more than certainly than 20. There's sort of about 40 there. So we need to start sort of consolidating some of that. It's because we've been madly selling puts and getting the stock put to us. A lot of them are in pretty small numbers, like 100 shares and what have we. So I've got an exercise going on at the moment, which is working on which are the best 20, perhaps 20 to 30 shares to own. And I'm taking my starting point with that of being value line and saying which stocks, out of all the stocks that they cover 1,700 of them, do value line estimate will go up in price by the most. And yeah, I'm going to be particularly interested in keeping those stocks and consolidating some of the others. What that will do also, it will be increasing the number of stocks and the number of contracts that we go with. So there's obviously too many to go through there. But another thing to point out on here is...
Sorry, Jeff, can I ask, are you able to automate that, or do you have to manually go to value line for each of the 3 to 5 year highs?
I've had to go. I spent a very pleasant morning with Value Line. This is what I call my data sheet. So this is another sheet on the same spreadsheet. So I've got the name of the company. Mm-hmm. When you put those stocks in the way that I've just shown you, quite often, well, not quite often, but now and again, for example, if you put BP in, it comes up and it's obviously not right. And what it's done is picked up the London Stock Exchange. So one of the things you can put in with the little box is the exchange. So I've done that here to make sure that we're on the right ones. That's how you do that. Then I put in the ticker symbol, and then I've also put in the industry because that's easy to get. And I'm going to be using that to look at the diversification. So when we consolidate the stocks, we want to be consolidating into a good spread of industries. Then we got the current price. Then I manually put in the forecast price that Owen goes through on Sunday night. And I'm just going to reduce this. There you go. I can't get to everything. Yeah, so I do that. So they're all put in manually, but that's just really a question of I write them down as he goes through them, and then I just replace the ones that need replacing or update them. Similarly, all of these ones here are the stocks that he identified in his little carry-on Sundays. And I've also put in, again, manually the scores that they've got on TICN. And then here was the work that I did this morning. So I went through every value line report for all of these stocks in the watch list. I don't know, there's about 150 of them. See how many there is, I don't know. Perhaps not, 139. And I put in the date of the current report. And then I put in the 80-month low forecast and high and the mid-range. So those put it in. And then I looked at the 3 to 5 year and put in the low and the high, and they don't give a mid, so I calculated it. So all of that's in, and I am actually going to put this on the website. So I'm going to share this with a link on the website so that any of the members can actually get to it. I actually did the exercise on Value Line, getting the top 20 out yesterday, but it was part of what I lost. But I could remember that one of them was ATUS. So that was in the top 1 or 2 for Value Line. So I highlighted it, and I'll be highlighting the others as I identify them. They're the ones we want to be going at. So that's been going on. And that will, once I've actually set it up, I will get some of our future trader friends to help me just keep it up to date, give them a dozen stocks each or something to update it. So a bit of delegation always goes a long way with me. So what I also want to point out is we've got now a lot more calls. So we've got effectively an additional income stream. What we've been doing up to now is only selling calls when you have to own the stock, but when we own the stock and that it was a price higher than the price we'd actually paid for it. I'm now being a bit more aggressive on that, particularly as we're interested in reducing the number of shares that we've got. So let's just have a look at some examples of that. So we've got the Cheesecake Company. We paid $50. The shares are currently at $41. We've got 500, and that's $20,000 worth. So I've sold the March 45 strike price call for $1. So that means that we are in danger, if you like, if that stock goes above $45 from its present 41, then it would probably get taken off us. However, we've already had $1 in call premium and $8.45 in put premiums on it. So our exposure is at $40.55. So even if they're taken off us, we would have gained by $4.45. And even if they're not taken off us, we are slightly ahead. So that gives plenty of scope to sell a new put and continue on with that if they are taken off with us. So what I'm saying is, where in the past, if something was underwater like that, one of the things we would do is sell the stock that had been put to us and then sell a new put. I'm just putting a new leg on that trade by saying, yeah, I'm happy to sell the stock and buy a new and then sell a new put. But on the way, I'll collect a bit of revenue and give it a bit more time, especially if the forecast is for it to be up to 50 from Owen and 56 to 72 from Value Line. So that's, I think, a reasonable approach to take. And I've been looking at these on generally on a daily basis. Even I've looked at all of these again this afternoon and sold a few more. So where there are these gaps, that means that we haven't yet sold a call for March. And so I'm still looking to do it. I'm going to go to
Jeff, can you just say about AT&T, why the gain called is minus $28?
TT. Oh, down here, hang on.
Yeah.
AT&T. Yes. It's not actually minus $28. When we sell a call, so if we'd sold a call on it, let's see, what price is it? It's current. We paid $30. It's currently at $20. Let's say that we sold a $25 call, and even if we just took that 49, once you put the strike price of the call that you sold in, that brings that right down. And where there is no call sold, it isn't there at all. The problem with this is that the 49 cents comes from a call that was sold previously, so it's just in there. So we're not exposed to be called to have a gain of minus 28 on it. We only have the $4 to contend with, so that's why we haven't done it. And let's have a look. So we got the 30. We've had where's me put income? Me call, the put premium was pretty low at $1.97. I suspect that's being kicked forward a dollar cost average or something. So we need to take some action on that, and I have put in an action on it, which is to sell puts. There we go. So what I want to do on that is to sell more puts, but at a lower strike price. So we sold some at 30. The current price, it's actually gone up. It's now nearly 24. So I'm going to look to probably sell. This one I don't trust it to go, but I'm going to probably sell them around $26 strike price. And we've got 600. This is another extra column on the side here. So it's telling me that of the shares that we've got in value, T only represents 2.91%. So it's not 5%. So there's scope to have more shares in it, and to do that at a lower strike price, and therefore to bring the average price that we've bought them at down. And if I can get that down by $4, I'd be doing well. But we'll clear that red box off. So all of these red boxes, in one way or another, will get removed. depending on whether we want to keep the shares or not. Is that clear enough? Is that all right?
Yeah, thank you.
It's an aberration on my spreadsheet, but I know what it means. This bit, I can share this on the website, possibly, but it's got so much other stuff in it. It's got personal accounts, so I'm not sure about that one. I have to make sure there's nobody trying to get in still. Hang on. No.
Sorry, Jeff.
Yes.
Question. On those spreadsheets, would that be an example of, say, for instance, starting your own account? Would that be some basis to start from?
Absolutely, yes. I'm trying to find some time to put some spreadsheets together as some blank spreadsheets, or some spreadsheets at least with only examples in, that members can take off and use for their own accounts. But I do, the problem is I keep changing them and developing them, but I can always put the current ones on the website. Right, what else? I want to show you something else. Yeah, here we go. You can see a different spreadsheet now, hopefully.
Yes.
Right, so this is based on figures that were taken from the dashboard that went out covering the end of January. So they're not wholly up to date. They're now a couple of weeks old. So first of all, Diamond has been trading for 11 months. So at the end of February, it has its first anniversary. We might have to have a bit of a party. And over that 11 months so far, we have had an average amount of money to trade with of $365,652. So there's more than that in. But if you go back to what we've had available from sort of day zero to the end of January, on day zero, it was probably about 3 and 6. And at the end of January, it was a lot more. So that's the average amount that's been available for us to trade. And we have used that to buy 28,250 shares, more than that now. And they were valued at 2,227. And that also is a little bit out of date. It's now, the shares are now worth 489,000, so a lot more already. Then we've got the estimates of what those shares from the end of January are likely to be worth on Value Line's forecast over 3 to 5 years. I've put the low in, the medium, and the high. And we also had, in addition to all of that, option drag. So a value in unexpired put options, they are put options, of 193,000, and cash of 233,000. So that gives us a value of the club as at the end of January 654,755. And the estimates for it, if we didn't do another trade, didn't sell another put, didn't buy or sell any of the shares, the estimates are that it will end up between 978 and $1.3 million. And using the cash that's available to withdraw, the value of the shares now, and the value of the option drag now, we're running at sort of towards 220 odd % in value. So, however, we won't be stopping trading. We'll be continuing to trade like maniacs, selling puts and taking on shares and getting dividends and so on. So I think the account is rather healthy. So we had.
Well done, Jeff. Well done.
It's easy. We had cash then of 233,000. It's 265,000. Yeah, nearly 265,000 now. So it's quite healthy.
Well done.
And,
Brilliant.
and
Yeah, can you just say again where that mid-gain average comes from? That 222.
yeah, sure. 2 mid-gain average. Mid-gain average. 222.
Line 29. 222.13%. What's that?
Oh, all right, yeah. Right, okay. What that is the portfolio as it was on the 31st of January. So that includes the 28,250 shares that we had at that point, valued according to the value line estimate in 3 to 5 years, as they would be in their midpoint valuation, plus the cash, plus the option drag that we've got. And that's where that comes from.
Okay.
So there's no more money going in there, and that would assume no more trading. So yeah, that's all right. So I'm pretty content that we should have this doubled over the next year. I would say I don't think we're going to have any trouble doing that, especially now that I've added in the additional income stream of the selling a lot more calls. So the thing with calls is that you get a lot less money for them, but you can potentially do them 12 times a year, whereas you get more money for selling a put, but they're sort of 3 or 4 months long, so you can only do them 3 or 4 times a year. Both of those income streams are worthwhile, and we are now starting to get dividends coming in as well with so many shares owned. In fact, I think if I go back to I've noticed there's a problem with a couple. It's only a tiny problem with a couple of the accounts. I'm not sure if this one is affected by it or not. We'll see in a second. So when the account was opened, I'm not going to say who opened it. Someone didn't tick a box on some of them. Just checking. Doesn't seem to be the case on this one, actually. This one seems to be all right. In some of the clubs, we've been getting dividends paid as additional shares. So instead of having sort of 500 shares, we ended with like 506 or something. Not even that, 506.3218, for example. So I've got to get those changed. We don't want dividends paying in shares. We only like shares in batches of 100. Now it's slowly repopulating. So when it does, we'll have a quick look down and see what's going on. We're about to get more shares because this Friday is Expiration Friday, and so we've got more shares coming to us. Quite often, either some won't get put to us, just keep the money. Some will get put to us, and we won't be brilliantly happy, but we won't be too worried. And some I've deliberately set them to be put to us to dollar cost average against the shares we've already got. So there'll be more coming in. But we definitely need to start consolidating a bit now. We're going to have more shares than Warren Buffett at this rate. So you'll say I've sold the calls I've sold. When I started doing it sort of two weeks or more ago, it was still worth selling February calls. As we got closer to expiration date in February, then they weren't viable, so I started selling the March ones. So next week, when the February ones expire, we will then immediately be trying to sell new calls on those stocks for March. So, and then in March, they'll all expire, and we'll be selling them all for April. So it's quite a nice little little earner for us. So I'm just now. There was a decision to be made. I can't remember what share it was. I'll just have to check. Let me have a look. I want you to have. There it is. It's someone's still trying to get in. It's on CTXS, Citrix. So let's have a look at Citrix. Jeff fits Citrix.
Right, there's some pants and socks in the middle of your bedroom floor. Could you put them away?
Could you mute, please, about your bedroom floor? Here it is, Citrix. Okay, so CTXS, current price is like $101.80. We paid $100 for this stock. It was put to us at $100. Let me just I'm just looking at my other spreadsheet to tell you. So yeah, it was put to us at $100, and we also had a put premium of $19.50. And it's forecast to go to $120 by Owen, 112 to 180 by Value Line. So the question is, and we haven't got many, where is it? CTXS, we only got 100. So we have some choices with this. We could just sell it now and pocket the profit. Profit would go into cash and into the stock buying power. Or we could try and sell a call against it. And that's the interesting question as to what we think is going to happen to it. So I'm going to stop sharing this and start sharing the charts. And we'll have a look. CTXS. CT. My powers of alphabet disappeared. Okay, here it is. Just pull in a bit. So this is CTXS, which we own at 100, and it's a little bit more. So the question is, what is going to happen to this stock? I'll pull out a bit. In the short term, there's a gap there to be filled. So it could do that. It could come down and fill this gap. And that gap's at about 86. The indicators are sort of coming down, but on the other hand, it won't stay down. It'll, even if it's just going in a straight line, it'll come back to this level. So we need to take a decision on what to do with it. And as there was nothing spoiling, I thought I'd leave it until we got to here. So we'll now look at the option chart and see what's available. February's only got 1 day left to go, so that's no good. So if we are going to sell a call, it will probably be for March, and they're not populated yet. Here they go. So we're looking at the left-hand side of this screen. So if you take the price as being basically $100, if we try to sell a call at a higher price, there's only a miserable 5 cents available. Not good. That would be for a $105 strike price. So there's no real point in doing that. That would just say, well, it's silly. We could be sat unable to sell it while it was sort of zooming down. So that's not the choice that I've got in mind. The choice I've got in mind is to say, well, if this stock, if we expect it to fall, and if we expect it to fall to about 85, 86, we could sell an in the money call for $16.70. So that would be another option. So if you would then just there's it's not fantastic, because if you add $16.70 to 85, then you're only going to come to 101.70, which is very close to where it is now. It's at 100, in fact, it's slightly below where it is now. So no great deal of point in doing that. So we're left with two choices. One is to sit on it if we think it's going to rise, and the other one is to sell it. Any thoughts? Any preferences? I think I've talked myself into thinking we should sell it.
Yes, well, with
That
the
would be
charts,
mine.
with the charts indicating downward trend, RSI, MACD.
Yeah, it looks tired out. It's struggling along, isn't it?
Yeah.
Yeah, I think we should sell.
Yeah, we've got too many shares anyway. We've only got 100 of them.
Isn't Owen's forecast that it's going to go up though?
It is. But when Owen does his forecasts, he isn't talking about in the next month. He generally says, "Oh yeah, in the next
It's talking it's sitting on the shares.
3 to 6 or 9 months." If we really like it, and if it appears in the top forecast to increase, then we can sell, and it does then go down in the short term. We can happily sell another put and get back into it, but perhaps at something like 85 or 90. So we're not necessarily saying goodbye to it forever.
Oh. Okay.
I would sell.
Go with
Yeah.
that.
I think sell's the best option.
Never let it be said it's not a democracy.
Yeah.
Those in favour say aye.
Yeah.
Aye.
Aye.
Yes.
Let's see. What price? 181. So it's on here. It's we should only get 180, but I'm waiting to see the live prices when this comes along. But for the sake of 1 cent, I'm not going to get too hung up. Here we are. Yeah, they are the same. So there's no real scope for negotiation. So I'll just try and get the trade done. It's executed. It's gone through. So let's have a look. It went through at $101.80, and we've paid. And you notice the commission on this is $12.95. That's for all 100. It's not per share. It's for the transaction. Even if it was 1 million shares, it would still be $12.95. But what I'm pointing out is it is $12.95 because it's a share transaction, purchase or sale, compared to a put or call transaction. They're $14.95. So that was like 101. Let's have a look. 101.8 times 100 minus was it 12? So yeah, so that's 10, we've made about 2,000. So we made sort of 20% on that. So that's not to be sniffed at, and we'll be using that money again.